Can Netflix sustain both innovation and profitability? Here's your Wall Street Game Notes earnings preview for Netflix's Q3 earnings reporting this week. The street is expecting $11.5 billion of revenue and earnings per share of $6.94. This would imply 17.3% growth year over year, which is about 14% higher than the average growth rate from the previous 5 quarters. The stock is sitting at about $1,250 and has moved sideways over the last 3 months. However, if you zoom out and look at the full 1-year chart, it's up more than 60%, and in the 2-year chart, it's up over 200%. The TipRank's average price target is about $1,400, signaling 12% upside. But let's take a look at the challenges in getting there. The first is limited revenue diversification, especially when you look at their competitors like Amazon, Disney, and Apple TV+. Those guys have theme parks, TV networks, and giant e-commerce and hardware businesses. The second is rising competition in streaming. That is making content acquisition more challenging and pushing up costs. The third is subscriber saturation. How many new subscribers can they obtain in mature markets like the US and Europe? And lastly, the AI threat. Not an immediate thing, but something to watch out for as a potential AI-driven competitor could start to crop up. On the plus side, they continue to pump out hit content, justifying their investments and price increases while also improving their margins. For example, Adolescence cleaned up at the Emmys last month, taking home 8 different awards. On the price side, they've successfully raised prices, effectively doubling it over the last 10 years, which could go higher. They also launched their ad-supported tier and are now making significant revenue from advertising. Visible Alpha has the estimate of about $1 billion of ad revenue from the quarter, which would represent about 8.7% of total revenue in the quarter. They are on track to meet their goal of about $3 billion of ad revenue for the year, effectively doubling it from the previous year. We'll be listening out for any updates related to this, especially as they've launched Netflix Ad Suite earlier this year to help drive ad revenue through features like enhanced data capabilities, more buying options, expanded measurement, and new creative formats. Some people view Netflix as recession-proof, so it might be a good play if you're worried about underlying weakness in the economy or a potential AI bubble brewing. Thanks, guys. Appreciate you all liking, following, subscribing. Stay tuned for the earnings debrief after the call, as well as other takes on big tech this earnings season. Be good.